Welcome to the London Outlook for Thursday, the 29th of February 2024. Starting off with the economic calendar, we have two red folder USD events. However, they're not as significant as something as GDP, CPI, or interest rates, and thus we can trade through these events. However, having said that, we'll chat about this some more as we move towards the New York session. In terms of the London session, starting off with the 4-hour time frame, we know that we are in this confirmed bearish market trend, and since then we reacted to the pro trend extreme. However, last week Friday we extended the pullback phase leg, validating the pullback phase last point of supply, and yesterday we reacted from the pullback phase last point of supply. In terms of trade direction, there's reasons to trade both long and short. Obviously, the pro trend move being too short to the downside is more probable, but it doesn't mean that counter trend longs can't play out. Having said that, moving on to the 5-minute, we know that for today, from a high time frame bias perspective, there's reasons to trade both long and short. Obviously, longs are considered counter trend, and we need to ensure that we have appropriate backing because we are interacting with the pro trend extreme, and from that perspective we have the pullback phase OB reaction to support any longs. We have available internal range liquidity, with the last point of internal range liquidity being here prior to the substructure target right there, after which point we'll be trading against the pro trend extreme, and we don't want to do that. So after which point we'll stop trading longs and focus on shorts. Of course, we also have sufficient evidence to suggest that shorts can also play out, and from that perspective there's reasons to trade both directions. How will we navigate the London session? Essentially, there's two ways to go about it. In terms of long trades, we'll wait for the current day low, Asia low liquidity to be taken out, and then once that's taken out, we'll try and focus on targeting this Asia high and also yesterday's Asia high of the day that it was unliquidated. Those two confluences together make it highly probable that price will move to the upside, at least temporarily. And then in terms of shorting, what we would require is the Asia high of the day in the current day to be taken out, and then of course we'd need Frankfurt or London high of the day, low of the day validation to validate that trading in the intended direction to the downside does indeed make sense. So to summarize, we can trade both directions for the day as the higher time frame narrative supports it. In terms of long trades, we need the current day Asia low of the day to be liquidated, and then we need to either validate Frankfurt or London in order to trade to the upside. The more likely scenario is that Frankfurt gets validated by London, and then that will enable a London based long. Alternatively, if we're looking for shorts, we'll need Frankfurt to take out the Asia high of the day, and then need London to validate the Frankfurt high of the day. Ideally, what we'd like is for the Asia liquidity to the low, to the bottom, to still be available to make the trade a bit more highly probable, but that isn't necessarily a requirement, and the same would go for any long trades. Obviously, if London puts in new high of the day or low of the day, then we would need to wait for New York to validate the London high or low of the day to trade in either of those supported directions. However, and that's purely because of the case that there aren't any London red folder news events to support why a London high of the day, low of the day should hold in the London session. So that's pretty much the London outlook. I hope you have a good trading session, and we'll chat again for the New York outlook.